Distinguished speakers, ladies and gentlemen, very good afternoon to everybody. On behalf of the SCCCI, I welcome all of you for taking time to attend this webinar on the market outlook and business opportunities in Myanmar. But COVID-19 has made many companies focus on their near-term challenges at home. I'm pleased to know that many businesses are also keen to be updated on the latest developments and opportunities in ASEAN. And this afternoon, we will focus on Myanmar. Now, Myanmar is often referred to as one of the last frontier markets in Southeast Asia, and it is a land of immense opportunities. Myanmar has a young economy that is rapidly developing. It has abundant natural resources, a disciplined workforce, and a young working population. And before the COVID-19 pandemic, Myanmar is growing at a rate of between 6 to 9% of GDP. Like many other economies, Myanmar economy has been hit by pandemic. Myanmar government has introduced support measures to help local businesses and households. If the domestic spread of the coronavirus is brought under control in Myanmar, and I'm sure that the global economy will recover, and Myanmar will grow, I think, at least at the rate of 7% next year. And this is a very respectable growth rate, and that is sure to attract attention of many businesses. It is very respectable growth rate that is sure to attend many businesses to come to Myanmar again. Now, on the other hand, companies are also mindful of the general elections in Myanmar to be held in November this year. Many will wonder whether Myanmar will change the direction of the economic policy after the election. Singapore and Myanmar have robust economic ties. Singapore has consistently been among Myanmar's top investors and trading partners in recent years. We are very heartened to know that Myanmar people generally have very good impression of Singapore brand due to the part of our culture similarities and also sizable Myanmar diaspora in Singapore. This is a plus factor for Singapore companies looking to venture into Myanmar. In fact, quite a number of Singapore companies are already active in Myanmar. OCBC is one of the first foreign banks to establish a foothold in the country. Another major Singapore company is Sembcorp Industry, which runs power plants in Myanmar. More recent entrants riding on the consumerism trend include BreadTalk, Canton Paradise. Other Singapore companies with presence in Myanmar are involved in information and communications, manufacturing, and real estate as well. The pandemic also presented the new opportunities for our companies. For example, to cut down on cash transactions. Many restaurants and shops in Myanmar have embraced e-commerce platforms. Myanmar also plans to raise its internet penetration to 50% by 2025. Spotting this emerging trend, Singapore registered ASEAN Capital Partners has already invested into internet service provider in Myanmar called The Frontier. But in conclusion, as today we have a distinguished panel of speakers who will be sharing with us on the latest developments and opportunities in Myanmar, I urge all of you to participate actively. I would also like to thank our sponsors, OCBC and UOB, in partnering Chamber to make this initiative possible. I wish everybody a very fruitful session, and most importantly, stay safe and keep yourself healthy. Thank you. Have a good afternoon.
Thank you, VP Ho, for the opening speech. It is certainly a great start to the second day of the Thriving in the Next Future ASEAN series, the Myanmar market. And now, let me introduce our first speaker of the day. Mr. Samuel Lee is the head of business banking at OCBC Yangon. With more than 15 years of experience in the industry, his team focuses on the acquisition of customers and businesses in line with the bank's target markets and supports the needs of the customers and the businesses in Myanmar. He will be sharing more about the economy and outlook of Myanmar post-COVID, as well as business opportunities for foreign companies venturing into the country. Over to you, Samuel.
Thank you very much, Carrie. It is a great privilege and honor to be here this afternoon to share a bit about the developments and our thoughts on Myanmar. So let me just bring up the slide. For today, I'll just briefly cover the following. I'll just give an update on introduction of OCBC and our businesses here in the region and in Myanmar. A quick snapshot of Myanmar and the current COVID situation, just to share with you our thoughts on what could be some of the new business opportunities and potential changes after COVID-19. Now, OCBC today is present in 8 out of 10 ASEAN countries, and our strong regional footprint with deep local knowledge of in our core markets allow us to be able to deliver scalable and sustainable solutions to our customers. Now, we have a very long history in Myanmar, more than 65 years. And in 2015, we commenced our banking operations here, and we were one of the first foreign banks to obtain the foreign banking license in 2015. Now, the bank supports the key sectors which are crucial to Myanmar's growing economy and development. And some of the sectors and loans we have provided to our customers include the real estate sector, where we financed the construction of Yangon's Prime Shopping Center, which is also Myanmar's first green loan. Now, we believe that green and sustainable financing will take on increasing importance in Myanmar in the coming years. And we are working with our customers to assist them as they embark on this green and sustainable financing journey here. Now, in the healthcare and education space, we also supported the construction and equipping of the first foreign, local, modern private hospital, and also Myanmar's largest private school operator, providing quality education to local and foreign students. In the telco sector, we arranged Myanmar's first syndicated loan facility for the construction of more than 800 telco towers. And we are also one of the first international banks to support and provide cross-border export financing to one of Myanmar's top agriculture exporters, here to facilitate the growing exports. We have also financed FMCG and transport infrastructure to support Myanmar's growing trade and manufacturing facilities. And we are also providing financing to microfinance companies who are lending to small farmers and entrepreneurs to strengthen their livelihoods. And for cash management, we were also appointed by an international supranational organization to support their cross-border cash management needs. Now, our strong local knowledge of banking in Myanmar has led us to win Myanmar's best international bank for 3 consecutive years. And we want to continue to build on that achievement to introduce new products for our customers. And we have a dedicated team of staff well-versed in the Myanmar market to support our customers. And as Myanmar remains a very cash-based environment, we have also put in place an arrangement with a local partner bank, whereby our customers can tap on more than 200 branches across Myanmar for cash transactions. I'll give you a brief snapshot of Myanmar. And Myanmar has a population of 54 million and is the second largest country in Southeast Asia after Indonesia in terms of land area. Now, Myanmar is in a very strategic geographical location, has abundant natural resources and a large young population. Since the reopening of the country in 2011, the country has undergone significant economic transformation. And with the initial wave of foreign investments, the country recorded strong FDIs over the past few years. Majority of the investments here from Asia, and many foreign investors set up intermediate holding companies in Singapore and in Hong Kong to invest into Myanmar. And these are also shown in the FDI statistics, where Singapore and Hong Kong are in the top 3 FDI origins. And the top 3 sectors for foreign investments were in the energy sector and manufacturing sectors. And this is due to the rise in the infrastructure needs, electrification, and also the country's development that have driven investments into these sectors. And then the import substitution industries have also boosted FDIs into the manufacturing sector. The latest FDI as of July is actually encouraging, as there were FDIs totaling about US 5 billion, which is already higher than the previous period. According to a World Bank report, with the current COVID situation, Myanmar's GDP forecast have been revised from 6.3 to 0.5%, as a number of sectors are impacted with varying intensities. And Myanmar will remain one of the very few countries globally to chalk up positive GDP growth this year. Now, assuming that the COVID-related shocks dissipate with a combination of infrastructure investments, increased activities in the service sector, stronger exports, growing private consumption, this is projected to return the GDP growth rate to its pre-crisis trend, although this will also be very much dependent on the global recovery. Now, the upcoming elections on the 8th of November will mean that many investors are likely to adopt a wait-and-see stance for now till after the elections. And we expect that after post-elections, the government will continue to maintain its focus on combating the COVID-19 situation and also to look into measures to help businesses and individuals with economic reforms. And with the opening up of the economy, foreigners can also own 35% equity interest in local entities, and hence opening up many sectors to foreign investments and competition. And there were further liberalization in the wholesale, retail, and education sector, allowing 100% foreign capital investment in the private sector. And the market is actually opening up further with the entry of new foreign banks and also foreign insurers that have entered the market, such as Prudential, AIA, and Manulife entering the market this year. Now, I'd like to give you some brief updates on the COVID situation here. Now, with the COVID-19 impact, the tourism and the garment industry are most impacted. For the garment manufacturing, for example, it is impacted largely due to the fall in market demand from Europe. And due to the ongoing weak external demand, other exports are also expected to remain weak. And remittances from overseas Myanmar workers is an important source of income for its recipients. And with the impact of COVID in the region, this has also impacted remittance flows into Myanmar. Now, the COVID case count was hovering at about 300 cases in August, that's total, which was lower than that of many other countries. But that has also since increased to more than 3,000 cases as of yesterday. And the country is doing its best, despite its very limited resources. The government have put in swift and stringent measures, including 21 days of quarantine, restrictions on foreign arrivals, closure of outlets and schools. Myanmar's long-term economic growth is expected to remain intact with its abundant low-cost labor resources, FDI inflows, and strong trade flows between China and Europe. The manufacturing data or manufacturing business have actually shown signs of recovery in August. And the agriculture sector, which accounts for about 21% of the GDP, appears to be less impacted for now, as rice in exports remain stable, whereas the livestock and fisheries industries are more impacted due to falling demand from international buyers. And the Myanmar government has also announced the COVID economic relief plan in April. And some of its measures include lowering of interest rates, economic release for businesses and individuals. And the Myanmar government's current focus remains on managing the ongoing crisis with the second wave and also the welfare of the local population as part of its COVID plan. Now, these are a list of promoted sectors, and the MIC is actually the government-appointed body to promote foreign investments into Myanmar, quite similar to EDB. So the MIC will also assess each application and can potentially offer tax incentives if the investor is part of the promoted sectors. And in the next few slides, we will just highlight and share some of our thoughts on key sectors where you as a business owner can look out for and participate. Now, with Myanmar's government focus to drive economic reforms and infrastructure development, there have been many projects in the works. And there were recent tenders for key infrastructure projects. With the recent results from the solar tender, the 1,000 megawatt solar tender, that is really to increase the power production capacity for the country. And the other example is also the Yangon Elevated Highway, where the government plans to implement a network of ring roads in Yangon. With the assistance of JICA, Myanmar is also implementing the Yangon-Mandalay Railway upgrade, which is expected to cut travel time between Yangon and Mandalay, the two key commercial cities. And as part of China's Belt and Road Initiative, Myanmar is also strategically placed within this economic corridor, accelerating infrastructure development and also to improve connectivity and trade. Now, other infrastructure opportunities and projects include water treatment, transportation and logistics, and there are also recent projects on JV industrial parks. And one example is the Myanmar-Singapore Industrial Park to be developed by Sembcorp Development. Now, with the growth of the middle-class population as well as incomes, there will be an increasing willingness to spend, and companies can also look out for opportunities to either provide such services or FMCG products for consumers here in Myanmar. For the healthcare sector, there is demand for quality healthcare services, and there are opportunities for the private sector to play a role in providing these services. There is also a segment of the population who travel abroad for checkups, for procedures, and treatment, and some of these medical tourism dollars could be retained inside the country if high quality healthcare options are available. And also with the opening up of the healthcare insurance market, this will also spur further growth in the healthcare sector. For the education sector, there is also demand for quality and affordable education services from preschool to K-12, higher education and vocational training. With the liberalization of the education sector allowing 100% foreign capital investments into the private education sector, this has also attracted attention from many foreign investors. And my fellow panelists will also be able to share more details with you later. Myanmar has abundant arable land, and the agriculture sector, which accounts for 21% of the GDP, is an essential sector. The current agricultural system is in need of upgrades in areas of research infrastructure, seed technology, fertilizer, irrigation strategies, and mechanization. And farmers are also looking at crop diversification to increase productivity while enhancing the sustainability of agricultural practices. Some other areas companies can also look out for are opportunities in post-harvest processing and packaging, value-added processing, wholesale trade, and contract farming. Now, the number of industrial zones in Myanmar have increased over the years, and over 80% of the industrial land is actually located in the two major commercial cities, Yangon and Mandalay. And over 20 industrial zones have been set up and established in Yangon with a focus on industries such as manufacturing, agri-processing, and consumer goods manufacturing. And COVID-19 has also resulted in a rethink about current supply chains, strategies, and also the need for greater diversification. And so in this respect, Myanmar is also a good candidate given its abundant low-cost labor, improving infrastructure, and close proximity to the two giant economies. Now, the crisis has also forced us to rethink many of our existing processes, and digital channels have become a key critical tool for business continuity. And this crisis has also created opportunities and needs for new digital products and services for the market. Now, the government has also started implementing online services for tax payments, for example, and custom documents. Just an example also, pre-COVID, we had challenges in encouraging our customers to switch to digital banking to conduct transactions. But recently, we have also seen an increase in digital transactions, and we have also seen many first-time customers conducting digital transactions. And we want to continue to add more user-friendly features to our internet banking platform to drive greater digital adoption, to improve efficiency for our customers. As shared earlier, Myanmar's long-term strong economic growth is expected to remain intact with continued FDI inflows. And some key sectors will continue to attract demand and grow, while some other sectors such as tourism will take time to rebound. And many countries have also restricted exports of essential medical supplies and goods during the crisis to prioritize domestic needs. And likewise, there were also restrictions in Myanmar, although these have been largely lifted. And the Myanmar government has also recently passed a law limiting imports with the intent to protect local enterprises from being overwhelmed by foreign imports. And it's currently unclear how this will be implemented and how widespread the impact will be. However, this could present opportunities for foreign investors or manufacturers to locate onshore production facilities here into Myanmar to serve as import substitution for domestic consumers. The talk about new normal has also been ongoing globally and likewise in Myanmar, and many countries are evaluating work from home, a permanent feature as part of their workforce arrangements. But in Myanmar, we also believe that this could be challenging due to the insufficient Wi-Fi broadband infrastructure in the homes of many of the people. And implementing the required physical distancing at work could also be challenging for many companies due to the space constraints, as many companies are also housed in old buildings. And with the ongoing crisis, it is also challenging to take on additional costs for additional premises to implement the required social distancing. And as part of the COVID relief measures, the Central Bank of Myanmar has also made a series of interest rate cuts for a total of 3% in March and April, bringing its policy rate down from 10 to 7%. And this has greatly benefited businesses and borrowers of the local Myanmar currency loans, as the interest rate cap on these loans have also been brought down. And the Central Bank of Myanmar has also deferred the implementation of 4 key prudential directives, regulations by 3 years to August 2023, which then allows the local Myanmar banks to expand its lending capacity to support local businesses during the crisis. Now, for the last slide, just want to share some of the other considerations as you look into investing into Myanmar. And the 4 Ps here, finding the right partner. It's important to work with a reliable local partner to navigate through the bureaucracy and also dealing with local authorities, for example. Finding the right people on the ground to understand your customers. And it's important to have local staff who understand the market norms. If you're distributing a product here to the country, positioning the product in the local market is important, as what may work in Singapore and in many other regional countries may not work here in Myanmar as well. And also to have a long-term view. While some companies have succeeded, some have not either. And so there's a need to be prepared and to build and invest over a long period of time, whether it's building a brand, introducing a product, or providing a service. And lastly, I just want to say that OCBC is well positioned to support you and your company investing into Myanmar, and given our experience and knowledge in this market. And that's all my sharing for today, and I thank you for your patience and your attention. Over to you, Carrie.
Thank you, Samuel. Next up, we have Mr. Chester To, partner of Raja & Tan Singapore. His regulatory practice covers merger control, antitrust compliance, and sector-specific regulation in the areas of telecommunications and media. He has also been regularly advising several MNCs and Singapore companies in their investments into Myanmar. He will be talking about the key changes in the legal and business regulations to take note of post-COVID and common mistakes that foreign companies make in the Myanmar market. Chester, please.
Thanks very much, Carrie. Once again, thanks to SCCCI for inviting me to present at this seminar. I'm very privileged to be presenting amongst friends. I think for the audience here today, we have a very experienced panel here who's been in Myanmar and of course, being involved in Myanmar since the early days. So I'm going to just touch on the legal aspects, right, of doing business in Myanmar. And if I can just, before I start, perhaps a little bit about ourselves. Myanmar is one of the 10 countries that we're present in Southeast Asia. It's one of our 12 offices. Our office in Myanmar is in Yangon, the commercial capital. It's a full service law firm, so we do the full range of legal work for our clients. At the same time, we have a Singapore-based Myanmar practice with fluent Chinese speakers, which we can support SCCCI members. I think, you know, what you have there is just some of the accolades that we've picked up recently. So things I will touch on today is an overview of the various modes of market entry into Myanmar and some of the key considerations for foreign companies. I will go on to talk about the Myanmar investment regime, right, by looking at some of the laws that are relevant for foreign businesses, and of course also touch on some of the other business-related laws that companies should be mindful of as they venture into the country. Now, as a start, a lot of people will ask, you know, how do you actually go on to kind of, you know, establish a business presence in Myanmar? And I think that, you know, there is no hard and fast rule. It very much depends on what you plan to do, right, in terms of your business activities. And of course, it also depends on which sector you are in. Of course, if I draw on the polls that was done by Samuel earlier, I think a lot of companies out here, a lot of the members out here want to distribute their products in Myanmar. And of course, in the old days, before Myanmar actually liberalized trading, it was not possible for foreign companies to be able to just sell their products in the Myanmar market by setting up a company to do so. So a lot of times they have to engage their distributors, right, and set up a distributorship in the country. Of course, with recent liberalizations, it is now possible, but I think there are the practical considerations that businesses should take into account, right? One, of course, Myanmar is a very big country. And of course, when it comes to infrastructure development, logistics, it's still in the process of developing, right? Which means that practically speaking, unless there is particular specialized know-how associated with distribution, generally, companies do not actually set up their own distribution network because, it is considerably costly to do so, right, at the outset. So companies tend to work with a distributor, right? And then, of course, over time, as the business ramps up, they may then consider, trying to go into the market either by themselves or through a joint venture with a local business partner. So here I have, the three, common modes of entry. Rep office, generally less applicable for most of the our members, unless you are in the financial services sector. And then when it comes to branch and, incorporation of a subsidiary, I think these are the two more common modes of entry. Obviously, for branch, I think we've been seeing, it being more popular with companies in certain sectors like the oil and gas sector. Of course, it's easier to exit, right? If, things don't work out as well. Incidentally, I think, arising from COVID, I think we've also been seeing companies doing some rationalization of their operations in the region, and Myanmar is no different, right? In some cases, when some of our clients find that, the business, in Myanmar is not growing as quickly as they have expected, they have decided to maybe focus on some of the other markets. And of course, when in that sort of situation, right, then of course, it is easier if you have a branch when it comes to exiting the market. The downside, obviously, there is no separation of, corporate personalities from the head office, right? That means that, you could potentially expose your head office to liabilities, right? And of course, in terms of some of the paperwork, it's just slightly more cumbersome than establishing a subsidiary, right? But of course, when you're dealing with sectors where there are capital requirements to be fulfilled, then obviously, by having a branch, you could potentially utilize the capital of the head office to fulfill the capital requirements. That also means that in some cases, the laws in Myanmar itself, do not actually address capital requirements, but rather talk about investment amounts being brought into the country. Now, in terms of incorporation of subsidiary, I think that's one that many companies will be familiar with, right? It's just essentially setting up a subsidiary, right, of your Singapore company in the country. There is obviously separate corporate personalities and liability, which means that, in future, if things do not work out as well, you know, there will be no attribution of liability, you know, to your Singapore parent, right? Unless, of course, the Singapore parent, you know, has extended any form of parent company guarantees, right? In terms of corporate governance compliance, right? Obviously, with the new Myanmar Companies Law, it's considerably easier than in the early days. I recall that in the early days when we were advising clients, you know, around 2012, 2013, setting up a company can take as long as 5 to 6 months. But, you know, these days you could get a company up and running in 1 to 2 weeks. So again, going back to one of the posts from Samuel earlier, I think you know, some of the things in Myanmar has certainly improved over the years. Right? There is now obviously a requirement to appoint a resident director, right? Compared to the past, where you know it's just possible for you know company to have foreign directors that are not resident in the country. So obviously, for some aspects, Myanmar has tightened the requirements, but that obviously is not something different, right? And for many of our members who you know, engage in activities in Southeast Asia, you will know that many countries have resident director requirements. Now, coming to the legal reforms, right? In the past, you know, Myanmar had a very strict companies legislation, right? Which means that, you know, so long as a company has any one share, right, that is held by a foreign individual, or foreign company, or foreign entity, that company is considered a foreign company. And what does it mean? That in a lot of the sectors, you know, foreign companies in the past are not allowed to participate. I talk about the example when it comes to trading. In the past, foreign companies are not allowed to participate in trading sector. Obviously, with the new change, you know, there is a liberalization in terms of shareholding, you know, in local companies, which means that, you know, for a local company, a foreign company can now hold, right, up to 35% of the shares of a local company. And of course, there are certain benefits, you know, associated with a local company. One, of course, is the ability to acquire land, right? Now, some of the key considerations, you know, for foreign entities, right? One is, of course, there is restriction on land use if you are a foreign entity. So for example, if we are looking at a company where the shareholding of a foreigner or a foreign company is more than 35%, that means that that company is not able to own land, right? And what does it really mean in practice? It means that one will have to take a long-term lease, you know, of that particular plot of land, right? You'll be pleased to know that while some of the laws are pretty draconian, for example, you know, requiring registration requirements, requiring approval for leases longer than a year, it is quite a usual, you know, mechanism that you know, foreign companies do, right? So, for example, if I were to open up a factory in Myanmar, then obviously, you know, you will obtain a long-term lease, and that's kind of similar to countries, you know, in the region, right, where it's, you know, a foreign company is not permitted to own land. So there are still quite a number of countries that have foreign ownership restrictions, and therefore, you know, when you venture into those countries, similar to Myanmar, you take a long-term lease. The other aspect, you know, for foreign entities is, of course, the very generous investment regime that the Myanmar government has set up to try to attract foreign investment. And I believe that's the reason why all of you are interested in the country. There is a whole raft of different incentives, you know, given to foreign entities. Now, what it also means is that, similar to what you see in other Southeast Asian countries, there are foreign ownership restrictions for certain sectors, right? And this is quite common, right? And for Myanmar, I would say that over the years, Myanmar has gradually liberalized a lot of these restricted sectors. So much so that if one were to compare with the likes of Thailand, Indonesia, Vietnam, Philippines, I would say that Myanmar is probably more open when it comes to foreign ownership restrictions compared to those countries, right? Now, in terms of restrictions on trading, I think there is still some sort of differentiated, approach that is taken by the Myanmar government when it comes to foreign entities participating in trading. So what it does is that obviously it looks at whether it is a local entity or whether it's a joint venture, and if it's a joint venture, how much does the foreign entity hold, right, in that joint venture? And based on that, there is differential investment requirements that are attached. So again, implicitly, there is some sort of favorable treatment, right, for local entities. Now, some of the key legislation that you need to be aware of when you're looking to invest in Myanmar. First, I will touch on the two important pieces of legislation when we are dealing with investment. One is obviously the Myanmar Investment Law of 2016, and the other one is the Special Economic Zone Law of 2014. Now, the Myanmar Investment Law, is intended to be a very modern piece of investment legislation. It strives to create a sort of investor-friendly environment, right, for foreign direct investment. It also looks to try to level the playing field by harmonizing the investment regime that we had previously for foreign investors as well as local investors. And of course, through the Myanmar Investment Law, that's when a lot of the foreign companies are granted long-term land use rights, what I can consider long-term leases, as well as tax exemptions. Now, the Special Economic Zone Law sits in parallel to the Myanmar Investment Law. It has broadly similar benefits as the Myanmar Investment Law, but is only applicable in the special economic zones. So if you're looking at a particular investment that is outside of the special economic zone, then obviously look at the Myanmar Investment Law. If you're looking to invest in one of the three special economic zones, then the Special Economic Zone Law of 2014 will apply. Now, currently there are only three special economic zones in Myanmar, all of which we've had the privilege to be involved in. The most advanced, obviously, is Tilawa Special Economic Zone. That's in Yangon, and that's the one that most people will be familiar with. It's essentially a Chinese-led, Japanese-led, development. The next one, Jiaopiu, is in Rakhine State. It's a Chinese-led development. I know that some people get a bit nervous when they see Rakhine State, but I will also invite you to take a look at the map of Rakhine State. It is indeed a very big, state in Myanmar. And, Jiaopiu Special Economic Zone obviously sit next to a deep sea port. And of course, that's still in the process of development. The rights obviously have been negotiated and awarded. Dawei in Tanintiri region was originally the first, special economic zone. But obviously, there were some issues in the initial days. And of course, the special economic zone is obviously not as well developed in terms of infrastructure currently. But I think there are changes in the work because, the government is planning to award, the rights to another developer. And hopefully we could see, more development in this particular regard. Now, the other piece of legislation that's quite important, obviously, the company's legislation. Earlier, I talked about the 35% cap for local companies, the resident director requirement, and of course, there is a minimum one-member shareholder requirement, as compared to the very old legislation that replaced the Myanmar Companies Act of 1914, used to actually require a minimum of 2 shareholders. And so, for some of the members out here who are looking to do due diligence, you may actually find that some of your counterparts or some of the companies you're looking at, have 2 shareholders, one 99.9% and one 0.1%. I think that was a legacy of the old legislation under the Myanmar Companies Act. Now, for Myanmar Companies Law, you have the key agency, DICA, which is responsible. And one of the very progressive aspect is, of course, bring the company's registration process online, right? So the online company's registry has streamlined the processes and timeline for setting up a company in Myanmar. So, obviously you could use it to incorporate new companies. You could use it for your searches, right? And of course, for filing of your annual returns as well. So I think that has really, improved, the system for foreign investors. The other one is, of course, the Myanmar Investment Commission, right? Which is the regulator that's responsible, for overseeing the Myanmar investment law. And of course, they will be the ones that scrutinize, investment applications. They're the one that gives you your MIC permits and endorsements. And of course, if there are any sort of investment expansion or variation, that's also the agency that, you go to. Now, the Myanmar investment law is essentially a consolidation of the two pieces of old legislation. Well, I wouldn't say that old, but two pieces of previous legislation, the Foreign Investment Law 2012 and the Myanmar Citizen Investment Law 2013. As I said earlier, it levels the playing field. It introduces a more calibrated tax regime, which I wouldn't go too much into because the next speaker, Sok Peng, will probably touch more about this aspect. And importantly, it clarifies some of the well-established exceptions to guarantees against nationalization and expropriation, right? And those exceptions were originally, not as clear in the older piece of legislation, but I think that it's good that the government has taken a more transparent approach in setting out some of these, legal exceptions. Obviously, it simplifies the process to obtain long-term land use rights. In the past, the old law only had the concept of MIC permits, but now there is the concept of endorsements, which one can obtain as well. And that's generally quicker and easier to obtain compared to permits. I will just have a very quick snapshot as to the differences between permits and endorsements. Long and short is that permits you would generally need for more capital-intensive, larger investments or investments that potentially have, a considerable social environmental impact, or it pertains to state-owned land and property. Although it's possible to obtain derogations from the government, right? So by and large, the more important projects you have to go under the permit sort of route. Now, for the simpler sort of more straightforward sort of projects, for example, if you are setting up a logistics business or a warehouse, the investment wouldn't be as substantial, then you may go for an endorsement application, right? What's also interesting is that if the investment is less than $5 million US, then there is the possibility of going to the regional or the state investment committee. So for example, if your investment continues to be in Yangon, then instead of going to the Union Myanmar Investment Commission, you actually go to the Yangon Region Investment Committee, right, to get your approval. The idea is obviously for the smaller investments to benefit from less red tape and to allow the state or the regions some sort of autonomy in approving investments. Obviously, permit application is more rigorous compared to endorsements, but I think the plus side is, unless you are in one of those sectors that do not benefit from tax exemptions, by and large, you can potentially obtain similar benefits and incentives, whether you get a permit or an endorsement. Now, these are just some of the benefits that you will get. Obviously, we talk about promoted sectors, getting your exemptions and reliefs from customs duties. When I mentioned earlier about a more calibrated tax regime, it also, differentiates, the sort of tax incentives that are given depending on which region or state that you invest in. Naturally, if you were to invest in a more developed place, such as Yangon, then obviously the government is giving you lesser tax incentives. The corollary to that is obviously the government is encouraging you to try to invest in some of the less developed regions of Myanmar by giving you tax incentives as high as 7 years, right? The other thing is, of course, the long-term land use rights, right? Which, as I mentioned earlier, the ability to actually transfer your returns, right, out of the country in the same foreign currency that you have brought in, right, and of course investment guarantees under the legislation. Now, I think this was a point I wanted to illustrate, what I said earlier about what Myanmar has done, right, over the years in terms of liberalizing, the various sectors. And under the Myanmar Investment Law, as per the notifications under the Myanmar Investment Law, there are now kind of 4 categories, right, that the Myanmar government has, put out in terms of investment restrictions. Obviously, you have at the extreme left investments that can only be carried out by the government, right? So, under that, there's only 9 of them. And some of the examples, I think, pretty much you would expect, security and defense, air traffic. And then obviously you have some of those that are reserved, right, for local investors. And again, there are not many of them. It's just 12 of them, right? So considerably lesser when you look to try to benchmark it against the other, developing countries in the region. And those, obviously, when you look at them, also carry some sort of reasoning, right? So obviously, the publishing of periodicals in Myanmar and other ethnic languages, jade mining, tour guide services, for example. So those, obviously, are reserved for local investors. And for those that are open to foreign investors, by and large, right, most of them, foreign investors are allowed to own 80%, right, of the investment. So it's an 80-20 sort of situation with the local partner holding 20%. And of course, there are a whole host of other sectors where there are no foreign ownership restrictions, but all you need is to, get the specific, regulatory approvals from the sector regulators. Now, I want to touch on one area that, a lot of the companies, when they first enter the market, they're unfamiliar with. Is obviously the employment legislation. Now, you have obviously countries that adopt a more pro-business, employment regime. I think, what commonly comes to mind is the likes of Hong Kong and Singapore. But obviously, you have many other developing countries that take a very pro-employee sort of approach. And Myanmar is just trying to strike the right sort of balance, right? It is still quite pro-employees, obviously. But of course, over the years, it has sought to try to modernize, right, its employment regime. So you can see that some of the pieces of legislation were newly enacted. Some of those, like the Leave and Holidays Act, even though they're quite old, they have been amended, quite a few times, as recently as 2014. There is obviously the introduction of minimum wage in Myanmar, which again, it's something that you'll be expected to find in a lot of developing countries. In the past, I think it was not possible for employees to establish labor unions, but ever since Myanmar has opened up, labor unions are now permitted, and that also means that there needs to be a regime, for the settlement of labor disputes. Now, one of the more draconian parts of the employment regime is obviously, some of the regulation, right, of employment contracts, right? So one is employment contracts must be entered into within 30 days. And if you have more than 5 local employees, then you have to register your employment contracts at the relevant township labor office, which is, dependent on where your registered office is. These employment contracts will have to follow the prescribed template employment contract that is, put out by the government. Of course, you're allowed to vary some of the terms, right? But, by and large, I think that the township labor office, essentially take an approach to try to protect the rights of employees. So they will indeed look at your proposed amendments to see whether they seek to try to undermine, some of the rights of employees. And then of course, once you have registered your employment contract, any sort of amendments or additions in future to those employment contracts will require a separate approval. I think that's something that for a lot of our businesses, that's not something that we're used to. Now, the other thing is, of course, unlike in Singapore, where we do not have a formal severance payment regime, it's pretty much based on practice, right? In Myanmar, there is obviously legislation on severance payment, and that's again tied to the length of employment. There is social security contributions. It's not exactly the same as what we have in CPF, but this is more of a universal insurance scheme, which both the employers and the employees have to contribute. There is obviously regulation on the working hours and overtime, and as well as overtime pay, right? And of course, as I said earlier, there is quite a prescribed process, right? If there is any sort of settlement of labor disputes. I think this is one area that companies do need to watch out. I think the experience of our office in Yangon is that a lot of times foreign companies do find themselves into with a lot of issues when it comes to labor relations, right? And for example, even when it comes to terminating your employees, you need to follow a very prescribed way of enacting that termination. So that is obviously something to bear in mind. And because of this, a lot of times we see cases before the labor tribunal, right? And that's where a lot of our clients come to us to help them with these sorts of issues. Now, some of the more important developments, right? So one is obviously intellectual property laws, right? So if you're looking to sell your products in Myanmar, right, you obviously will be concerned about the extent of intellectual property protections, right? If you're going to set up in Myanmar, then potentially you need to, you may want to obviously protect your trademarks, right? So the intellectual property laws have been, in the works for many, many years, right? Obviously, Myanmar as a least developed nation was granted extensions by, the WIPO, right, for enactment of the intellectual property laws. And so, finally, last year, they managed to push out those legislation, but of course, quite a number of them, have not come into effect yet. So I will just focus on the trademark law, all right, that has come into effect, right? And of course, that's also something that companies do need to be mindful of when they go into the market. Now, the new trademark law adopts a first-to-file system, right? And in the past, prior to the enactment of the trademark law, there is no trademark registry. And trademarks will need to be filed as a form of property, right, under the registration of deeds office, under the Ministry of Agriculture and Irrigation, right? So, you could see, the sort of archaic system that Myanmar used to have. And obviously, the new trademark law seeks to create, the modern trademark registry, for trademark owners to be able to register and protect their marks. So the new online trademark registration system is scheduled to be soft launched on the 1st of October, right? So just a couple of weeks away. And that will enable owners of existing trademarks that are registered, to actually re-register on a new online system, right? So that's the period of the soft launch. Right? And of course, if you are not previously registered, that means you've previously not, provided your declaration of ownership or issued a cautionary notice in the local newspaper, then you have to wait till the soft launch period is over to register your marks, right? But unfortunately, it is a first-to-file sort of system, right, over there. And there are obviously other pieces of IP legislation that are coming into effect, your copyright law, your patent law, as well as industrial design law. So watch out for those, The other one that we've been getting quite a bit of queries of late is obviously the insolvency laws. It came in just about the time when COVID was actually blowing up, right? So obviously, was something that some of our clients were closely following. Replaces very, very old pieces of legislation, the Rangoon Insolvency Act of 1909 and the Burma Insolvency Act of 1920. One key aspect is the modernization of the insolvency legislation to adopt the ancestral model law on cross-border insolvency. There are some obviously exceptions to the cross-border insolvency regime, but by and large, it tracks what we have under the ancestral model law. The one thing to note is that prior to the enactment of the insolvency law, there is an insolvency regime that exists under the Myanmar Companies Law of 2017. So what the insolvency law will seek to do is that it will not apply to any winding up of company that is commenced under the Myanmar Companies Law, right? So that's one thing to note if you have an ongoing, insolvency case in Myanmar. Yep. So I think that generally gives a snapshot about the key business legislation. I know there's constraints of time, but I think I'll just flag a few things that businesses that are looking to Myanmar will need to be mindful of. Right. One is, of course, to do your due diligence on your counterparty. Right. I think that's quite important. Be mindful of the sort of limitations that Myanmar has. I mean, it's ultimately a very, very different sort of country than what you see in Singapore. And so, there are minefields, right, that you need to be alive to. So I thought that against that backdrop, I will give some of my top tips, right, for trying to, get a deal through or try to be successful in your investment. One is obviously do your homework, do your preparation. The fact that you're attending the seminar is a good first step. It is ultimately a very different environment, so be very mindful of cultural sensitivities and take your time to try to understand local customs. If you have a local partner, I would very much encourage communication and regular and clear communication. Right? I think for some of the joint ventures that we've seen that didn't work out as well, frankly, some of the issues could have been avoided with better communication at the outset. If you're looking to go in big, right, into Myanmar, then obviously, by all means hire a team of advisors to advise you on government relations strategy, right? And in this regard, the choice of advisors are quite important. You do need to go with advisors that are experienced in the Myanmar market. And of course, your adaptability is important. So be prepared to react amidst a changing regulatory environment. A lot of times people talk about the upcoming elections. I think the plus side is obviously we don't have as much uncertainty with the political regime as compared to the 2015 elections. I think the current government still stands a very strong chance of getting re-elected. And of course, we've seen, the current government during their 5-year term, and, is a bit less of an unknown, right, compared to when they first took power in April 2016. Now, a lot of times there will be, areas where you will find that it's not clearly black or white, right? And therefore, there is that sort of gray area that you need to deal with in developing countries. So I would encourage, getting some sort of regulatory risk assessment, from advisors. And of course, as with any sort of plan, for developing countries, have a plan B, right? And possibly even a plan C, right? And of course, if you have been tasked to, spearhead your company's entry into the Myanmar market, then I think you also need to manage some sort of internal expectations early on, right, as to what can be achieved, given the sort of limitations in the market. And I noticed my 10th tip is actually similar to the last of the 4 Ps that Samuel had, which is patience is a virtue, right? And this is a market that needs time. But I think that if you are prepared, to invest and spend time, in the market, it is ultimately a market that will reap the sort of rewards, as my fellow panelists will attest to. All right, thank you very much.
Thank you, Chester. Now let us welcome Ms. Deng Suk Ping, Deputy Head of Myanmar Tax at PwC. She has more than 40 years of experience in tax compliance, planning, and due diligence across Myanmar, Singapore, and Malaysia. She has handled numerous Myanmar projects, including providing tax due diligence and inbound tax structuring advice. She will be talking about the key considerations to take note of before venturing into Myanmar, as well as some of the new norms in business and tax regulations after the crisis. Over to you, Suk Ping.
Good afternoon, everyone. By way of introductions, I'm Suk Ping. I'm the tax partner of PwC Myanmar. As mentioned by Carrie, I have been in Myanmar assisting many clients in their structuring or in their proposed investment into Myanmar. And I have been stationed in Myanmar since year 2012, when the sanctions of the country was suspended. So for today's sessions, I'm going to share with everyone what is the Myanmar tax environment today, as well as how are you going to manage your impact on your investment into Myanmar. Okay, I will just go through, just give a very brief overview about PwC Myanmar. So in 2012, PwC returned into Myanmar, and it is managed by PwC Singapore. We have started our office with 4 people. Today we have about 130 people, and our office is at Junction City Tower. And we are the largest international Big 4 in Myanmar. And in the past, we have a closed number of deals of 25, and the total value of the deal closed and the fund that we have helped the client to raise is about $4 billion. There are 3 key focus of PwC Myanmar to help our client to create the value. Firstly, we help our foreign client to invest into Myanmar, but at the same time, we are also helping our local client to transform and grow their businesses. And we are also advising the government on the infrastructure project in Myanmar. So for PwC Myanmar, we do provide tax services, risk assurance services, as well as the advisory services. Okay, here you go. This is a table that you will need to always watch out for when you are entering into Myanmar in terms of the key structuring. So number 1, the holding structure. Either you will invest directly from Singapore into Myanmar, or you will even want to invest into Myanmar through your holding company. So like say, for example, it could be the invest direct from Singapore, or you can also use another investment vehicle in Singapore, i.e. you have a 2-tier structure for your investment into Singapore. As mentioned by Samuel and Chester just now, you can either wholly own your investment into Myanmar, or you will need to find a local partner to form a joint venture for your investment into Myanmar. Secondly, which is quite a popular method here, is either you invest into Myanmar by setting up your own company, or you may also consider to do a acquisition. So acquisition means it's through the merger and acquisition. And the method of doing it is through asset deal or share deal. Share deal means you can just acquire the share in the Myanmar company, or you can even do a structuring such that you will form a joint venture company in Myanmar. With that, then you will be buying the business assets from your local partner for your new joint venture company in Myanmar. Financing, it could be equity or through the debt financing. You also need to consider what is the tax implication. And in Myanmar, we do have a foreign exchange control regulation. So before you even finance, you decide the financing method of the investment into Myanmar, you will also need to think about what is the foreign exchange control regulation. So in other words, when you pump in the money into the country, you will also need to think about how are you going to remit the capital, even the profit, back to your home country. And the next consideration is a cash repatriation. When you invest into Myanmar, very important for you to think about how are you going to extract the cash back to your home country. So there are various methods to it, such as dividend, interest, royalty, management fees, and there are tax implications as well as the foreign exchange regulation that will be governing all these cash remittance. And finally, exit strategy. So when you invest, some of you may wanted to hold your investment in Myanmar for long term. Some of you may just want to invest in Myanmar and with the objective to exit in a short term, even in a medium term. With that, then you will need to think about when you exit, what is the tax implication. Okay, so this is just a table to show, just to share with everyone that when you invest into Myanmar, what are the types of legal entity that are available, which Chester has already shared. It's either you set up your company or joint venture under the Myanmar Companies Law or Myanmar Investment Law, or under the Special Economic Zone Law, SCCCI. And alternatively, you can also consider setting up your operation through a branch. So I would say before we can even decide, what are the types of entity to be set up, there are a few key considerations. Number one, you will need to know what is your intended business activity that you would like to carry out in Myanmar. As mentioned by Chester just now, there are regulations. There are also the notifications that issued by the government that governing all these types of business activity. Say, for example, if you want to set up a manufacturing plant in Myanmar, then the question here is that, are you able to do it yourself, or will you need to find a local partner, right? Whether do you even need a piece of land? If you would need a piece of land, then as mentioned by Chester, a foreign company is not allowed to own the land legally. So how are we going to do it? So the common solution in Myanmar is that to find a local partner or even to find a local landowner will then be able to lease the land to you for long term. And in order for you to do that, you will need to go through the MIC, the Myanmar Investment Commission, which is under the Myanmar Investment Law, MIL, or you can even invest into the SCCCI. As shared earlier, there are 3 SCCCI in Myanmar. So currently the SCCCI that is in Yangon is called Tilawa. That is led by a Japanese company. Okay, then on top of that, you will also need to think about how are you going to maximize your tax incentive, right? Later in the next slide, I will go through with everyone what are the tax incentives that are available if you were to get a permit or endorsement under the Myanmar Investment Law as well as under the SCCCI law. There is also a share capital requirement too, depending on the types of activity that you're going to undertake in Myanmar. Okay, I'm not going through this table because Chester has really shared with everyone, but I will just go through with everyone only the tax aspect to it. So if you are the branch, the branch will then be regarded as a non-resident for Myanmar income tax purposes. The tax rate applicable to a branch is 25%. And as a branch, you will only be taxed in Myanmar on the Myanmar source income. Good news is that when the branch make profit, there will be no further dividend, there will be no further withholding tax on the branch profit to be remitted back to the head office. So this is a good news. Then for the company, similarly, the corporate income tax rate is also 25%. The difference between the branch and the company is that a company will be regarded as a tax resident in Myanmar, and therefore the company will be subject to Myanmar income tax on the worldwide income. As compared to the branch, you will only be paying taxes based on the Myanmar source income, right? Similarly, for the dividend to be declared by the company, it will not be subject to any further dividend withholding tax. So this is a good news based on the current tax regime. Okay, and the tax incentives that are available under the Myanmar Investment Law versus the SCCCI law, if you can just compare the table, the SCCCI law, the tax incentive, they are more attractive as compared to Myanmar Investment Law. So under the Myanmar Investment Law, for the land lease wise, it is 70 years provided under the Myanmar Investment Law, i.e. 50 years plus 2 rounds of 10 years extension. Then for the SCCCI is 75 years, 50 years plus 25 years. So the difference, there's an incremental difference between the two laws by 5 years. But for the corporate income tax incentive, under the Myanmar Investment Law, the income tax exemption could be ranging from 3 years to 7 years, depending on the zone itself, whether this zone is regarded as a underdeveloped area or not. Even for the MIC, they have issued a notification. They have even designated the zone within Myanmar itself. They will tell you, for your proposed investment location, how many years of income tax exemption that you will be entitled to. So if for those areas that is at zone 3, which is an adequately developed zone, you will only be entitled to 3 years. So I think for these 3 years, if let's say you have a plan to invest into Yangon, generally the income tax exemption is only 3 years. And it's also quite important to take note that the MIC is become more selective in incentivize the company. So in other words, before the MIC will grant you any income tax exemption, they will also look at whether your industry sector is considered as a promoted sector for the investment in Myanmar. So as mentioned by Chester just now, there is a notification issued by the MIC. They have also prescribed what are the sector that is considered promoted for investment in Myanmar. And after you have operating in Myanmar for the first 3 years, 5 years, even 7 years, and when the company is making profit, and the investor has a plan to reinvest the profit into Myanmar, the government do encourage you. They will then allow you to reinvest your profit into Myanmar, into the same company or in the expansion project. Right. With that reinvestment, the MIC will also grant you a additional income tax exemption, which is based on the profit that you are going to reinvest into Myanmar. Comparing to SCCCI, they will look at whether your zone itself, whether it's a free zone or promotion zone. Free zone is really more for the investor who set up a local production in a plant in the SCCCI itself for export market. For the promotion zone is more for domestic market, right? So they will be different income tax exemption period to be granted, is ranging from the first 5 years to 7 years. And there is also an additional 50% relief on the income tax exemption for the second 5 years. Okay, custom duty and other internal taxes. So under the Myanmar Investment Law, especially during the construction period, when you will need to import your machinery, your equipment, your construction material into Myanmar, then under the Myanmar Investment Law, the MIC will also grant you the custom duty and other taxes exemption. So in other words, when you import all these machinery or material into Myanmar, you do not need to pay the duty and the taxes, which will help you to save for most of the cost for your importation. Right? If you have a plan to even set up a local production for the export, which Myanmar, the government encourage and also promote the export market for Myanmar. So with that, then they will also grant you the custom duty and the commercial tax exemption on the raw material or the material that you're going to import for the production. And this is really more for the export market. Right? If your plant were to produce for both domestic and the export market, with that, then the MIC will also allow you to claim the refund. In other words, when you import the raw material or the material into the country, you will need to pay full taxes and duty. Just that at the point when you re-export your finished goods out of the country, you will then be allowed to claim the refund on the custom duty and the commercial taxes. So this will also help to encourage the export market in Myanmar. If you have any expansion plan, as I mentioned, always the MIC will always encourage you to expand your projects in Myanmar. If you have an intention or has a plan to expand your current project, with the approval from MIC, you will also be able to get additional custom duty exemptions. Then for SCCCI, as I mentioned, there is a difference between free zone and the promotion zone. So for the free zone, you will be able to claim the custom duty and the commercial tax exemption during the whole operation, including the construction period in Myanmar. And when you import the raw material, it will straight away giving you the whole custom duty and the commercial tax exemptions. Then for the promotion zone, there is a limitation because free zone is meant for export, right? Promotion zone is meant for the domestic. That's why their custom duty exemption is less attractive as compared to free zone. But having said this, for the promotion zone, you will still be able to entitle to the 5 years and also the 50% relief, exemption for the second 5 years if you were to set up in SCCCI in promotion zone. Then for the importations of raw material, for the export, you will also be entitled to exemptions of custom duty and commercial taxes. Okay, so this slide is about how are you going to structure your investment into Myanmar. Option 1, direct investment from foreign country into Myanmar. So maybe in this case here, we can say this foreign investor are from Singapore. And as I mentioned earlier, you can wholly own the Myanmar company if the law if the law allows you to do so, right? If there are certain investment regulation, such as MIC, that require you to have a local partner, then with that you do not have a choice. What you will need to do is you will need to find a local partner and then form a joint venture company in Myanmar. With that, then you will then be able to hold your share into the Myanmar joint venture company together with a local partner. This is a base case for your investment structure in Myanmar. Okay, the option 2 is really to think about whether do you even want to set up a special purpose vehicle for your investment into Myanmar, such as you at the top from Singapore, right? Then you will also set up a investment holding company in Singapore for your investment into Myanmar. So the reason why this structure is very popular is just because the holdco, say in the future, when the foreign investor will want to exit from Myanmar, instead of the foreign investor will be selling the share directly in Myanmar company, under this structure, the foreign investor can then selling the share at the level of holdco level, such that you will not be liable for Myanmar capital gain tax if you were to do it at the Myanmar level, right? So this is one of the benefit why some of the foreign investors are holding their share through holdco in Singapore. Okay. Furthermore, Singapore does have a very good double tax agreement with Myanmar. So with the double tax agreement, the DTA between Singapore and Myanmar, there are some tax benefit that you will be able to enjoy. With that, then maybe in the next slide, I will just go through with everyone about what are the potential tax benefits under the DTA between Singapore and Myanmar. Okay, financing of investment, debt versus equity. So Chester has mentioned about the debt to equity or team capitalization just now, which every time when you invest into Myanmar, there is a debt to equity ratio where the Central Bank of Myanmar, they before you even can extend your debt into a Myanmar company, you will need to seek a approval from Central Bank of Myanmar, and the Central Bank of Myanmar will always ask what is the debt to equity ratio, and the common debt to equity ratio is 3:1 or 4:1, and depending on which industry sector are you in, right? They may also impose certain minimum share capital requirement in order for you to meet the 3:1 or 4:1 debt to equity ratio. And some multinational corporation, the investor, they may even consider the financing through the debt. It's because if you were to do it through equity, and given that Myanmar has a foreign exchange control regulation, it will be difficult for the investor to return, to extract the cash from the Myanmar company through return of capital. Because in order for you to do it, you will need to do a capital reduction exercise, which will be time consuming. But by doing the financing the investment through debt, then this will then help you in terms of the flexibility, because as long as you got a approval from Central Bank of Myanmar for the proposed shareholder loan to be extended into the Myanmar investment, this will give you a certainty of in the future you will be able to repay the loan principal back to your home country without going through the capital reduction exercise. Then, so when you finance your investment through debt, you will also need to think about what is the appropriate interest rate to be charged. And with that, then you will also need to think about what is the withholding tax implication, as well as the deductibility of your interest in the Myanmar company. Okay, and this slide is really showing you all the various tax rate that you will need to take note. So if you will to extract your profit through dividend, interest, royalty, or the service fee, always the Myanmar government will want to impose withholding tax from you. Right, dividend, good news, there's no withholding tax. But I also wanted to highlight to everyone that recently the Myanmar government has released a latest draft of income tax law. And this draft new income tax law is still under the discussion. And the provision under the draft new income tax law will still be subject to further changes. But I would say for today, all the audience here or participant should also take note what will be the potential changes proposed under this draft new income tax law. With the current tax regime, there's no dividend withholding tax, but under the draft income tax law, the government has proposed to introduce a dividend withholding tax of 15%, 15, right? We are gathering your feedback, and we will be providing the feedback to the government to see whether this is the right time, for them to introduce the dividend withholding tax, given that the country still need the FDI. Having said this, as I mentioned, Singapore has a very good DTA with Myanmar, and the DTA between Singapore and Myanmar will be able to reduce the dividend withholding tax from 15% to 5%, subject to conditions attached. Right? So this at least will help you, to manage your tax costs if the draft law is enacted in their current form. Interest, 15% withholding tax, and under the treaty between Singapore and Myanmar, the rate could also be reduced to 8% or 10%, depending on the conditions attached. Royalty, 15%. DTA can also drop it to 10%. Service fee, 2.5% currently. And the DTA can potentially reduce the service fee withholding tax from 2.5% to 0%. Okay, and very, very important, foreign exchange regulations. So in other words, when you have a investment into Myanmar, when you remit the cash or capital into the country, even later when you need to extract the cash out of the country, you will always need to think about what are the regulatory approval process that we need to go through, as well as to put in place the supporting document such that you will be able to remit the cash in and out of the country without having issue. Okay, so this slide is about what are the key taxes in Myanmar at one glance. I have just segregated the taxes into 3 categories: direct taxes, indirect taxes, and other taxes. So say if you were to set up a company in Myanmar, the company will need to pay corporate income tax of 25%, which is based on the profit. If you were to hire any employees in Myanmar, even from overseas or locally, you will also need to take note of the personal income tax implication, and the tax rate applicable is ranging from 0% to 25%. Chester has mentioned about as employer, what do you need to take note, right? Apart from the social security contribution, apart from the employment contract that you will need to prepare, or the registration that you will need to complete with the labor office, right? You will also need to take note that as employer in Myanmar, we adopt pay as you earn system. So in other words, every month when the company were to pay the salary to the employees, you will need to deduct the personal income tax from the salary payment to be made to the employees, and remit this personal income tax to the IRD, which is on a monthly basis. So I think this is something that you will need to take note, and this is one of your employer tax obligation in Myanmar. Right, capital gain tax is 10%. So this is about in the future, if you at the point of exit, you will want to sell your share in Myanmar or your capital asset in Myanmar, you will need to determine what is the gain and pay the taxes accordingly to Myanmar. And for the oil and gas sector, the capital gain tax rate is higher, is ranging from 40% to 50%. Okay, withholding tax is when you are making payment to your supplier, especially to the non-resident supplier. You will need to determine what's the nature of the payment and deduct the withholding tax from the payment and remit the same to the IRD, Internal Revenue Department. Okay, indirect tax, there is no VAT or GST in Myanmar, but we have a very unique indirect tax system called commercial tax. So this commercial tax is a hybrid tax where they have a features of VAT and the single tail sales tax or service tax. Just because under the normal GST regime, you will be able to claim the full input tax against output, right? If let's say there's any excess of input over the output, you will be able to get the refund from the tax office. But in Myanmar, you will not be able to do so. The government is kind to you, where under the commercial tax regime, you will still be able to do the input tax claim. It's just somehow when there is any excess of input over the output, you will not be able to get the refund. So that's why there is a, we call the commercial tax as a hybrid tax for the VAT and the sales tax. And the standard commercial tax rate is 5%. We also have a specific goods tax ranging from 5% to 60%. This is a form of excise duty. Like, when you're buying any liquor or cigarette, then or even the motor vehicle, you will need to pay the SGT. Custom duty is when you were to do any importation into the country, right? Then you will need to just look at what is the tariff code, and with that tariff code, then you will need to determine what is the custom duty rate that is applicable, and the range is very big. It's ranging from 0% to 50%. But the 50%, I would say, is more it is really applicable to liquor product rather than the normal kind of goods to be imported into Myanmar. Stamp duty, this is a very hot topic, where every time when you sign any documents in Myanmar, you will need to think about what is the stamp duty applicable, and you will need to get it stamped with the township revenue office. Failed to stamp, there is a penalty of 300%. Right? In the past, the late stamping penalty is 1,000%, and the government has reduced it to 300% recently. For your operational guide, in Myanmar, before they sign any contract, they should always consult with the tax advisor or the finance team about what is the stamp duty applicable, and you should do all this stamping on time, such that you will not be suffering any penalty. Okay, and item 11, Social Security contribution. This is more like our national insurance scheme in Myanmar. So every month, as employer, you will need to contribute the Social Security to the Social Security board in Myanmar, and the rate is quite low. It's 2% and the 3% by the employees and employer respectively, and they also be a monthly cap every month is 6,000 and the 9,000 Myanmar kyat per month. So the total monthly contribution cap is 15,000 Myanmar kyat. So which is about our 15 Sing dollar per month per employees. Okay, the trend of a current tax environment, the country has opened up since year 2012, and we do see a lot of improvement from time to time. But having said this, the country has just started the journey 7 years ago. The tax law in Myanmar is still thinly legislated. So in other words, there could be tax law published, but it could be subject to open interpretation by the tax officer and the taxpayer. With this, I would say some of the taxpayer may have faced challenges in interpreting the law correctly, as well as to know how to comply, with the tax law without having dispute from the tax authority. And the tax law are subject to repeat changes. Sometimes the tax law could be just published on a local newspaper in the local languages. Then without you knowing, the tax law can be just passed, and you may not know what are the potential implications. So I would say for you, always need to think about monitoring all these changes closely, such that you do not miss out any important tax law changes. Okay, then also the self-assessment system, where in Myanmar in 2012 we adopt official assessment system, Official assessment system means that you as a taxpayer, you submit your accounts to the tax officer for the assessment. And the tax officer will have a right to assess your tax based on the account submitted by you. Right? Then they will have a right to make any adjustment to your tax return. As compared to self-assessment system, where you as a taxpayer, you prepare the tax return yourself and the tax computation yourself based on the accounts that prepared by you and audited by a certified public accountant in Myanmar, CPA in Myanmar. Then the tax authority will not have a right to assess you. What they will do is that they will issue you a self-confirmation letter, right? Just that with the self-confirmation letter, within the 7 years, they will have a right to conduct a tax audit on you. So I think this will change the tax landscape for the Myanmar, where starting from 2015, which the government has set up a pilot office called Large Taxpayer Office. So they have, this LTO has started adopting the self-assessment system, but the government has a plan to implement the self-assessment system across the board in the near future. So if you are having an operation in Myanmar or have any companies in Myanmar, you will need to take note that the self-assessment is on the way. So in other words, you yourself must know how to read the law and to comply with the law, such that you will be getting yourself ready and prepared for the tax audit if your company is assessed under the self-assessment in the near future or even currently. Okay, then the tax reform is ongoing to improve the tax administration and the policy in Myanmar. As I mentioned just now, there is a brand new income tax law, but this brand new income tax law is still a draft and is still under the discussion. So based on our informal dialogue with the government, the draft new income tax law may be enacted in next financial year, i.e. from 1st October 2021. Having said this, the effective date has yet to be confirmed, so we are still waiting for further development. Good that you will find out more about what is this new law about and what could be the potential changes or the impact on your operation, especially what I have mentioned just now, the dividend withholding tax of 15%. So this is just one of the example. All right. Another new features that could be introduced in Myanmar is the transfer pricing. So currently, there is no transfer pricing in Myanmar, but under the draft new income tax law, the government has the intention to introduce the transfer pricing regulation in Myanmar. Commercial tax, as I mentioned just now, is a hybrid of taxes, right, between the GST and the sales tax. But in the near future, the government also has the intention to introduce the VAT or GST to replace the commercial tax. So I think this is something where you will need to take note while you are considering Myanmar as one of the country that you will want to invest into. Okay, these are just a few key tips for everyone when you are investing into Myanmar. As I mentioned, the law is thinly legislated. What you need to understand is that what is stated in the law, as well as what is the practical position taken by the tax authority. With the understanding, only you will be able to identify the solution. If there is still a dispute between the two, means law versus the practices, you may want to seek a tax ruling from the Myanmar Tax Authority. Is really no tax ruling means it will be legally binding between the tax officers and the taxpayer. So both parties will then agreed upfront on what is the tax position to be adopted to avoid any dispute in the future. Like our body, when we are not feeling well, we will, even before we feel not well, we will always do a body checkup, right? For tax, perhaps you should also consider conducting the tax health check just to get yourself prepared for the tax audit. And watch out for the tax reform and to get ready for it. When we say tax reform, always there will be a draft law release, like our brand new income tax law, right? So when the government released the draft law, in fact, they release a draft law for public consultation. So they do encourage the taxpayer to provide feedback to them so that they can consider your feedback internally within the government before they even pass the bill into the law. Okay, so that's all from me about the structuring. Thank you. Carrie, over to you.
Thank you, Suping. Our last speaker today is Mr. Ho Gin Wee, CFO of International Language Business Center. Prior to joining ILBC, he was the CFO for a real estate group operating in Myanmar, developing industrial and residential projects for 4 years. He will share more about some of the key challenges faced as an SME when venturing into the Myanmar market, as well as the ups and downs that the company experienced in the process. Take it away, Gin Wee.
Thank you, Carrie. Okay, thanks for inviting me to share my experience in Myanmar. While I'm not a business owner, but I've been looking at Myanmar for the last 6 years and spending 2+ years of the my last 2+ years in Myanmar. Hopefully that can give everyone some idea of what it is to be in Myanmar. So the topics I'll cover today is firstly, why Myanmar? That means why invest into Myanmar? The second thing is some of the challenges that I see when doing business in Myanmar. And the last thing is a little bit about COVID-19 and how I've seen companies here, including my own company, pivot into the new normal. Okay, so just before we get started, I'll just put some standard disclaimers that what I'm sharing is actually solely my own opinions and does not represent my company. Okay, before I get started, I thought that it would be good to know each other. So maybe we can do a quick poll, which I hope Tiffany can help me with this in terms of launching the poll. And then we can see amongst the participants here, how well do we all know Myanmar? Tiffany, could you launch the poll? Yeah.
Yes, Gin Wee, first question is being launched to the participants. We shall give the participants some time to fill up the list of questions because I think there's quite a number of questions, options for them to read through first.
Yep.
Yes, I believe with your experience sharing, you can really bring up, what's so good about, going to Myanmar, and the challenges and the sweetness out for it after so many years of experience in Myanmar. So we shall give the participants a couple more seconds, about another 10 more seconds, and we will start to end the polling session soon.
Oh, just actually looking at the interim results, I can see quite a fair bit of the participants are already operating in Myanmar for more than 3 years. So actually that's very encouraging.
Yep, I think it's time to roughly end the poll, and now I'll also be sharing the results. So the participants should be able to see the results now. Yep.
Yeah, I think from this poll, right, I think it's quite interesting. Like we can see 13 participants actually having operated in Myanmar for more than 3 years already. And at least 5 companies operating in Myanmar for between 1 to 3 years itself. And 8 companies already preparing to commence operations in Myanmar. Yep. So I think at least that gives all of us an idea of the participant mix over here. Next, I'll move on to the next poll questions. Could I just get Tiffany to help me with that as well?
Sure. The next question is being launched to the participants. They should be seeing the questions in their screen now. And I can see that, people are start submitting their answers already.
Yep.
I think as usual, we'll give probably about another 30 more seconds for the participants to read through and think about it to see which is the answer that they'll be submitting through.
Well, just looking at interim results, actually very few participants are looking at an investment horizon of above 5 years.
Yeah, it seems like, yep, the less than 5 years seems to be more of the popular choice. Yeah, but we'll give another 5 more seconds for participants who are still clicking their answers before we share off the results. Okay, and I think we are good to share.
Yep, let's go ahead.
Okay, and here's the results.
Yeah, we can see most of the participants here, they are thinking that if they were to do an investment in Myanmar, they would like to recover returns that are appropriate for them within 3 to 5 years. So I think, just based on what I see in Myanmar, I think this goal is doable, but it's not an easy goal to reach. I think if you were to look into investing into Myanmar as a frontier economy, we probably need to look at a slightly longer term. Yeah, but anyway, that's again just my opinion. Your knowledge of investing into Myanmar may differ quite a fair bit from mine. Okay, I think that's good for us to know each other. With that, I'll just proceed on to highlighting what I think is interesting in Myanmar. So I think firstly, Myanmar is a re-emerging economy, possibly the last ASEAN frontier market, unless you want to include countries like maybe Papua New Guinea or maybe Sri Lanka, which are also not invested heavily into at the moment. So the other thing that if you were to notice, I actually use the word re-emerging economy for Myanmar. So why did I say re-emerging instead of just emerging? And I think one thing is if we were to look back 70 years ago, actually Myanmar was like the crown jewel of the British colony in Asia. It was even more advanced than Singapore. It was even more advanced than Hong Kong at the time. So the people in Myanmar has gone through, especially the older generation, they have actually gone through a very prosperous period. And they are used to seeing a certain amount of economic activity until the decades of isolation brought about from the military rule itself. So I think with that, you can see that actually there's already a basic layer of infrastructure in Myanmar that was left behind by the British, and of course improved upon by the military government and the quasi-civilian government after that. So I think that gives quite a big potential for companies to come into the country and try to leverage on this clean slate. Okay, the other thing is what the speakers earlier have actually shared. The strategic location is part of the Belt Road Initiative, is part of the China-Myanmar Economic Corridor. It's neighboring China, it's neighboring India. These two are very large countries with a lot of population, and potentially these two countries could be driving a fair bit of the global supply chain in future. It's also bordering Thailand, Laos, and Bangladesh. And Myanmar actually has a very wide frontage to the Bengal Sea itself and the Andaman Sea. So actually, it is actually positioned very well. And that is actually why the Chinese wants to why they want to set up a special economic zone in Chao Pyu in Rakhine, as what my fellow panelists have actually shared earlier as well. Myanmar also has a lot of natural resources. For example, gas, crude oil. It has a lot of minerals. It has jade. It has ruby. It used to be the rice bowl of the world before the country closed itself and Thailand took over. So there are a lot of resources in this country that can be tapped upon. But of course, if you try to go into the extractive oil industries, the oil and gas industries, very often you will find that there are a lot of local interests already looking at those resources. So it may not be so easy to go into that type of industry, for example, mining and things like that. It's also a new market. It has a population of approximately 55 million people, and the demographics are actually very young. Some of you may be actually looking at a diversification of supply chain. For example, due to this COVID-19 crisis, I think some companies are actually thinking about diversifying part of their supply chain away from China into like maybe a China +1 or China +2 structure. So if you want to tap on Myanmar, the young demographics, the cheap labor force, that is something that you could actually think about as part of your business strategy. The other thing that is interesting about Myanmar is that it actually recognizes the national language, which is Burmese, and it also recognizes English. So actually you can have contracts in English in Myanmar and it will be valid. So it is unlike a lot of other ASEAN countries where you have to produce the contracts in their national language. And you yourself as a Singaporean, unless you know that language, it's actually pretty hard for you to really know whether all of the clauses in that contract are actually sharing the same intention as what you were thinking about when you went into the contract. And you have to depend heavily on your translator and your legal advisor as well. Okay, so the other thing that is interesting about Myanmar is it is a common law country. It also recognizes the Singapore International Arbitration Court, and they have launched a new company law back in 2018. So that was already touched on by Chester earlier. Okay, exports-wise, Myanmar is also interesting. It's a WTO member. It's an ASEAN Free Trade Area member, and it also gets a tax incentive from the European Union under the Everything But Arms incentives. So basically, under the EBA agreement, anything that you manufacture in Myanmar to export into Europe, actually there is no import taxes. So actually it's very attractive for European importers. Of course, this part is a bit tricky nowadays because in the past, Myanmar and Cambodia both have this EBA incentive, and we have seen Cambodia losing their EBA incentive last year. So whether this will happen to Myanmar or not because of the human rights issues in Rakhine, that is still uncertain. But as of now, there is still this EBA incentive. So I think if you're interested to explore this and you have customers that are in the EU, you could consider setting up a manufacturing base in Myanmar to get some advantages out of this. And as the other three panelists have shared earlier, there is a whole host of MIC tax incentives, and foreign ownership can be up to 100% for certain industries. Labor cost is rather cheap compared to other ASEAN countries, definitely lower than Thailand, definitely lower than Vietnam. Bangladesh may be a close fight, yeah. But I think again, with labor costs, I think for business owners, we probably need to take it with a pinch of salt, because your labor cost can be cheap, but the productivity could be low. So unless you can make sure that the productivity is of a certain level that even if you produce lower than what you have in China nowadays, but with the cheaper labor costs, you are still able to get some arbitrage of that, then only should you consider coming into Myanmar, I think. And like I've said earlier, Myanmar currently is a clean slate. They are leapfrogging obsolete technology and structure, and there is a huge modernization drive. So, for example, in the banking sector, they basically almost skip over the entire credit card, debit card era and jump right from checkbook into digital payments. So I think that's something interesting. Even on the telco front, When I first came at the end of 2013, it was still like GPRS 2.5G technology. And in 2015, 2016, already you start getting 4G. In fact, one of the telco operators, Mytel, they were advertising last year that they could actually do 5G already this year if the Myanmar government opens up that bandwidth. So I think you can see how fast technology has grown in Myanmar. And also, I think it's good that the Myanmar government has a reformist and an opening up agenda. So actually, that encourages new FDI to come into the country. So that's good for the overall landscape of the country itself, because you don't want to be the only one that's coming in. Then you have a very big challenge in trying to spread your limited resources to go into every segment that you want to go into. High mobile penetration rate, like what I've mentioned earlier. So urban cities like Yangon, Mandalay, Naypyidaw, even the second tier cities, Tongji, Michinda, these are also seeing very high mobile penetration rate. So I think it's good for the era of digitalization, the era of technology that we are in. Okay, if we look at Myanmar, this is actually from ASEAN Development Bank from their June 2020 report. So you can see that all along the GDP growth has been hovering between 5 to 7% for the last 4-5 years. In year 2020, because of COVID-19, they forecast that it may drop to 1.8%. I realized that this number is a bit conflicting with what Samuel has shared earlier, because his data was showing that it was forecasted to be about 0.5%. And I would like to clarify that I think his source is basically the World Bank source, which is forecasting at 0.5%. But nevertheless, I think the key message that we should take away from this is that most of the multilateral organizations like World Bank, ADB, they are actually forecasting positive GDP growth for Myanmar, vis-a-vis negative growth for a lot of other countries. So I think that's one of the key takeaways. And you can see that in year 2021, if assuming the C-19 situation can be under control, the growth rate could be going up to 6%. So I think that's something exciting for business owners and companies in Singapore if they are looking to venture into the region. Okay, this one is another comparison that was done by ASEAN Development Bank from June 2020 report. On the left side is basically the growth rate forecast for 2020. And you can see Myanmar is ranking number 2, just behind Vietnam, out of all the ASEAN countries. And on the right side is their forecast for 2021. And you can see Myanmar is ranking number 4 out of all the ASEAN countries. So I think it is something interesting to look into. Of course, whether the forecast will really be true or not, I think let's all take it with a pinch of salt. Because if everyone has a crystal ball and you can get the numbers correct, then you might as well punt in the stock market already. Okay, after covering what I think is interesting in Myanmar, I'll just move on to some of the challenges that I see. So some of these challenges may not be things that I've encountered, but it could be things that I've observed from looking at some of the other companies that my friends in Myanmar are actually running. So I think some of the challenges that you first have to think about is from a customer angle, whether you are able to find the customer segment, or are you able to create that customer segment for your company if you are trying to sell something in Myanmar. Currently, Myanmar middle income class is very thin. So if you are trying to sell high value items, it may not be so easy, because the people with the money to purchase them, very often they will just either travel out of the country before the C-19 situation. Of course, now with C-19, some things could have changed. So in the past, the wealthy people, they will just travel out of the country, they will purchase them, and they will bring them back. For example, their luxury bags, handphones, and some of these things they are actually just buying overseas and bringing back to Myanmar. So whether can you find that market in Myanmar to sell your products? The other thing about Myanmar is network distribution. Myanmar, as what Samuel has touched on earlier, is a very large country. It's the second largest landmass in Southeast Asia, in ASEAN, just behind Indonesia. And Indonesia is archipelago of islands, right? So Myanmar is the largest piece of inland landmass that is contiguous in ASEAN. So your network distribution, if you are planning to sell your products across Myanmar, and if you are selling physical products, you have to make sure that you are able to find a way to solve your network distribution, your last mile delivery and logistics issue. So again, that's another challenge. How are you going to reach your customers? And I think the other thing is really about promotion and marketing. So what are the mediums that you want to use to promote and market your products to your customers? In Myanmar, WhatsApp is not very popular. So WhatsApp is more like a Singapore thing. So I think in Myanmar, the most popular tools, number one, Facebook. Number two, Viber. So I think beyond this, it's very hard to find other tools to actually reach out to the customer segments. So maybe, again, this is something that you might want to think about if you are trying to come into Myanmar. Culture and organization. This is probably what I think is the biggest challenge. So Myanmar's culture, firstly, yes may not be yes. So if in a meeting you are talking to your team members, you're talking to maybe your business partners, if you see them nodding their heads, it may not be yes. They may be just nodding or saying yes out of respect for you. And the other thing is, if you are giving instructions, again, if they nod and they say yes, again, they may not understand the instructions. So I think it's actually quite important for you to check very subtly whether what they understand is what you intended when you're trying to do business in Myanmar. The other thing that I find in Myanmar is they have this elastic time concept. When I say elastic time means if they arrange a meeting at 2 o'clock, they can actually come to you only at about maybe 3 p.m. or 4 p.m. or even 5 p.m. And in the past, I think that's excusable because of the bad traffic situation. But even today, I still see quite a fair bit of this elastic time issues. And along with the elastic time issues, the other thing that I face is a lot of last minute arrangements. So in places where I worked previously, right, for example, Singapore, Japan, China, when we arrange a meeting, we actually do it maybe we try to at least do it 2-3 days in advance, right, to schedule everyone's time. In Myanmar, it can be very last minute. They can actually just tell you this evening that you're supposed to come for a meeting tomorrow morning. So that is how last minute it can be. I think I've also seen friends who complain that they are asked to go for a meeting just 1 hour later. So I think that actually intrudes a lot into your own personal time planning and how you set aside time to do your work and things like that. In terms of decision making in Myanmar, it is still very much concentrated in the hands of the business owners itself. And that is a large part due to the fact that most of the large businesses in Myanmar are still family conglomerates as compared to corporate structure, whereby you have proper senior management and things like that. So I think when trying to run your business in Myanmar, like what the panelists earlier, Chester has said, right? Do your due diligence, find out whether you are dealing with a family structure or are you dealing with a corporate structure. If you are dealing with a family structure, very often you have to be able to meet the key decision makers, who are very often the founders or the shareholders of the business itself. Connections and relationships is another challenge. So this is like Guanxi. So Guanxi is very important. You need to do warm-ups in Myanmar. So take time. Very often, your first 2 meetings, you will not get anything productive done. beyond getting introductions and maybe a little bit of knowing about each other's company. If you really want to go into a deep business relationship, be prepared to spend time. And I think, like what all the panelists have said earlier, patience is a virtue. So nicing must be there. Okay, so you need to spend time to build a relationship before you can get things done. So connections are also very important. And why I say Guanxi is important, right, is because if you look back, when Myanmar was closed, it was actually run by the military-related families. So a lot of them are still controlling a lot of the good assets in Myanmar. As a company who is looking into invest into Myanmar, you then have to make your own decisions whether you are willing to work with this type of companies, or will you screen all of them off completely? Or if you want to work with them, to what extent would you want to work with them? And I think in recent months, we have seen that the UNHCR, they actually wrote a report that was that labeled a few of the crony companies. And lately, there has been a lot of negative press of certain companies that deal with some of the military-linked companies here. So I think that is something that you have to decide as a business owner or a company that is looking to invest into Myanmar, whether you are okay to find a way to work with them. The other challenge, I think, is on people. So skills-wise, knowledge-wise, you must remember that they have been closed for many years. So there's a lot of catching up for them to do. So if you are coming in, be prepared to do knowledge transfer, technology transfer, and you need to spend time to teach them skills. So a lot of my friends, like those in the construction industry, they say, okay, in Myanmar, you can get cheap labor, but if you are trying to get skilled labor, like carpentry work, then it's very difficult. So, for example, you're trying to, let's say you want to do a development that has built-in cabinets. For those type of fine carpentry work, you actually have to probably look for resources from other countries. And C19 is definitely one of the challenge in terms of trying to bring this labor into Myanmar to work on them. But at the same time, C19 has actually caused a lot of foreign Myanmar workers who used to be working in Thailand, Malaysia, even in Singapore, or other parts of the world to go back into Myanmar, and they bring their skills back into Myanmar. So I think the local government here is actually also trying to tap on this set of workers to see whether they can do vocational training to their fellow people to then bring up their skills such that they can do the work that people will be willing to pay them for. The attitude of the workers here generally, I would say, is good. They demonstrate a hunger to learn. So I think that is important because, I mean, personally, for me, attitude is the most important thing because attitude decides the aptitude that you can, you have, and it also decides how high that person can be trained, you see. So expectations wise, I think the people here, they generally come in with low expectations, but invariably after a while, when they think that they are indispensable, then the expectation starts to grow quite high. So you can see that actually there are a lot of people here with a title inflation. So they have a very big sounding titles, but actually the work that they do is really very, I would say, could be just a medium level or even a low level management team. Language wise, I would say the older generation, which will scoot when the British were still in the country, English is very good for them. Then when the military government closed down all of the schools and converted the local curriculum to Burmese, that's when a lot of the population lost the ability to use English. But after the reforms come out, we can see that the local government is actually encouraging the use of English again. So I think when you come in, just bear in mind that there is like a lost segment of the workforce that is not able to speak English that well. But I can see that a lot of them are actually subscribing to additional English supplemental courses to upgrade themselves. And I think that is a good thing because it shows that the people are willing to learn. The other thing about the people is actually the unions. Okay, so those factory owners who are looking to set up manufacturing bases here, be aware that the unions hold a lot of power over here. And we have seen a lot of clashes in local newspapers between the workers' unions and the employers' association. So it is unlike Singapore where you have an NTUC that helps to make things a lot more amicable. Over here, the unions actually go on strike. And because it's not, there's no like one concentrated union that governs all the unions, right? So every union starts striking on their own factory grounds. It creates a lot of problems for factory owners. So I think this is something that factory owners need to be aware of. Laws and regulations, like what Chester has touched on earlier, there is legacy industry practice, there are also old laws, and there are local officials' interpretations. So I think the good thing is the local government has recognized this. They are trying to do a modernization drive on the laws and regulation. But at the same time, Myanmar is a very big country. You can't expect information flow to be perfect, and you can't expect enforcement of the new laws and regulations to be perfect. So I think if you're coming into Myanmar, just be prepared to be very patient on this front. Okay, the next thing is speed. Okay, unlike Singapore, where you can actually set up a company very quickly, and you can get most of the filings and things done relatively quickly. In Myanmar, just be prepared that there's a lot of bureaucracy. And sometimes in certain industry-related filings, there may be a lack of clear process. So again, you have to find your ways to muddle around and find your way to the objective that you are trying to reach. So in this case, I think it will be good to look at the advisors that you are bringing on board. You will have foreign advisors, for example, PwC here, or any of the big four. You have all of the law firms here, Raja & Tan, and any of the other Singapore law firms. They are very good in terms of looking at things from the foreign investors' angle and advising on the differences between the foreign and locals laws and regulations. At the same time, also do not neglect creating relationships with some of the local professional firms, especially those that are helping with CorpSec matters or some filing related matters, because they have certain ability to get things done that you may want to use them to speed up your process. Okay, the next thing is, the next challenge I think is infrastructure. So be prepared for electricity outages, be prepared for monsoon rains and floods, fire safety, yeah, especially if you are siting your office in a very old building. So most of the old buildings, the fire safety isn't that good. And be prepared for long travel time, because a city like Yangon, for example, traveling between one office to another office downtown, it could take you maybe 2 to 3 hours. And actually that is just 10 miles of travel time only. So that tells you how much travel time you need to allocate. Okay, the other thing that has been alluded to by my fellow panelists earlier is the high cost of rental. And like what they have mentioned earlier, as a foreign company, if you're coming in, you cannot own land. So you have to do long-term land rentals. You have to be prepared that certain cities, for example, Yangon, the land could be very overpriced. For example, when I first came in end of 2013, and across that period to the end of 2014, right, the rentals in downtown Yangon was as expensive as high-end office space in London itself. So I think that tells you how expensive and how ridiculous the land rental rates were in the past. Of course, that has come down a lot since then. But nevertheless, I think it is still pretty expensive. And I think, again, do your due diligence. Find out whether first you really want that location. Second thing is, if you want that location, whether you're prepared to pay that price for that location. Yeah. And very often for land rental here is often upfront payments. So it could be like, if you are doing small rental, the landlord may ask you to pay upfront for 1 year. But of course, now with C-19 and a lot of the foreigners being unable to come into Myanmar, you can see that some of the rental prices of commercial office space and even residential units have dropped a bit. Yeah. And the other thing about going into land rental, right? Do your due diligence properly, because ownership of land title may be very unclear. So especially, I think if you were to do some research across the last 1 year, the Mandalay city authorities, they have been saying that there are some miscreants who have been misabusing their documentations to sell land that they do not own, or they sell land multiple times to different owners. So I think be very careful with that. The other thing is about financing. The local borrowing rates in Myanmar is very high. So like what Samuel has shared earlier, if you are trying to borrow from a local bank here, be prepared to cough out 10% interest rate per annum. And that is if you have collateral. If you cannot provide collateral, you are basically looking at interest rate of about 14.5%. So that is actually very high. If you are able to find funding elsewhere that is cheaper and find a way to bring that into the country, for example, via a MIC structure, then you will be able to get an advantage over others by simply arbitraging that already. Okay, of course, if you're coming in as a Singapore entity, then you can always look for OCBC and any of the other Singapore banks here, like UOB, and try to get financing from them. So that will hopefully lower your borrowing rates. Okay, the other thing that is a challenge in Myanmar is the accounting books. Okay, so be very careful, especially if you are trying to partner with a local owner in a JV structure. Make sure you do your due diligence properly. How many sets of books they have? It's like China like that. So you could have multiple set of books. The other thing that you need to check on is whether they have cleared all of their taxes in the past. Okay, that is very often another stumbling block for people looking into going into a JV structure. The last thing is Myanmar, even though they adopt IFRS, but this adoption is still very, it's not fully implemented yet in terms of full adoption. So one of the issues is you don't really get a set of consolidated accounts. So if you want to see what is the consolidated financial operations of a conglomerate, right, that you are trying to go in as a JV entity with, they may not be able to give you a set of consolidated accounts. Or even if they prepare one, it may simply be an aggregation rather than a real set of consolidation with the necessary eliminations between intercompany and intracompany balances and inter and intracompany profits and losses. And the last thing to be aware of is there will always be hidden costs, so be prepared to buffer additional expenses. Yeah. So hopefully that shares with you some of the challenges. Maybe after that, thought of just getting to know all of you more, and basically based on your own field, what you think are the top 2 biggest challenges for your company if you were to invest into Myanmar. So please tick up to 2 of the following choices. can I get Tiffany to just run the poll on this?
Okay. Gimli, yes, I've already launched a poll for the participants to view at 8, but probably we have to cut short the slides really because we have overrun the time, and I think, unfortunately, Chester, one of our speakers, have to leave before the Q&A. So maybe after this whole slides, maybe we can wrap it up, and then we will proceed on with the Q&A session.
Okay, yeah.
Thank you. Yes, I do see the poll. There's quite a number of people, submitting their questions, the answers ready. Probably we'll just give another 10 to 15 more seconds before we end off the whole polling and sharing of the results. Yep. Okay. And yeah, probably we can end the polling and we'll be sharing of the results.
Yep.
Okay.
Okay, actually, it's quite interesting to see that most of the participants here are putting laws and regulations as their top challenge. And the second biggest challenge is actually the markets, whether they can source customers. Yep. I would have expected culture to be a bigger issue, but I think maybe what the participants are looking at is more on trying to understand the laws and regulations first, trying to assess whether they want to come into the market here and whether they are able to get the customers or whether they are able to run their supply chain here to produce things for customers elsewhere. Okay, I think that's interesting for all of the participants to know. Okay, I think maybe I'll just run this last slide quickly, and then the rest of my slides, I probably wouldn't cover into too much details because I want to give enough time for the Q&A. So I think the good thing about Myanmar is that they have very good impression of Singapore and Singaporeans. The Singapore Inc. branding is very well received. The hallmarks of Singapore ventures here, the trustworthiness, the reliability, the quality, the adherence to contracts, the skills and technology transfer, these are things that the local businesses and local natives value. The other thing is they view Singapore as a hub and ecosystem also, especially for education, healthcare, finance, transshipment. And very often Singapore is a second home for most of the wealthy Burmese. But of course, there are also some disadvantages also. I think they see that Singaporeans are generally not so risk-taking, and sometimes Singaporeans are too compliant sometimes. And some Singaporeans could be not so culturally sensitive, or maybe may come across as a bit arrogant. So I think with this, I think if we are coming to do business in a foreign country, I think the advice is always be humble, and always to treat others how you want them to treat you. I think if you can do this right, it's very easy for you to blend into the local market. And some people, they see that they are only talk, no action. So NATO, right? Yeah. Okay, I will not touch on this already because time is up. But so I will just share the slides with SCCCI and let them upload into their website for the participants to use. Okay, in this case, I'll pass back to Carrie.
Thank you, Kim Wee. We
Yep.
have now come to the Q&A session. So before we begin, for those who would like to receive the presentation deck, please take some time to scan the QR code on the screen right now to fill out the short survey. So after you have finished the form, the presentation decks will be sent a few days later after editing is done. So we will also be sending a post-event email with a feedback form link and contact details of the speakers to participants after the webinar. So let's welcome back our speakers. Suping will be the moderator for the Q&A as well. Many apologies. Chester and Samuel have to leave earlier because of a prior work commitment and will not be joining the Q&A session. So due to time constraints, we will only be taking a couple of questions, but rest assured your inquiries will be forwarded to the speakers accordingly. So I will now pass the time to Suping to start the Q&A session. Over to you, Suping.
Given that we are running out of time, just wanted to maybe take this opportunity to address a couple of questions that is raised by some of the participants. So, Gimbi, you have shared a lot on what are the key challenges when the companies are doing business in Myanmar. So there's one question from one of the participants to say that what is the stumbling block to Myanmar to becoming a attractive China +1 investment destination for companies who are looking to diversify their supply chain. Jimmy, are you able to address, because you have shared many challenges, right? So do you think, what do you think? What are the key challenges that you think this could be the key?
Okay, I'll just share my thoughts on this. I think for most of the companies who are looking to make Myanmar one of their supply chain diversification location, right? One of the things that you have to consider is the reliability of the electricity supply here, especially if you are running operations that require electricity. So one of the biggest manufacturing operations here, right, is actually garment and textile manufacturing. And inevitably, to do garment and textile manufacturing, you will need reliable electricity supply, because you have your sewing machines, you have your irons, and you have your LED lights in your factories and things like that. So while some of it can be solved by putting backup generators, it also cannot be a long-term solution. So that has been something that the Myanmar government has recognized already, and they are definitely trying to increase the electricity output from their plants, including getting a lot of the foreign investors to come to build power plants here. Yeah. So I think electricity is probably one of the biggest challenge. Of course, the other thing is you need to consider for your company your logistics supply chain. So let's say you are able to manufacture something from a factory or somewhere in inland Myanmar, where land is cheap and plentiful. Then do you have the land connectivity to bring the goods like trucking all the way down to the nearest seaport, which currently should be Yangon, to then do that transshipment into Singapore or to elsewhere? So connectivity is one issue, electricity is an issue. And I think the other thing that you need to consider is the environmental and social impact. So interestingly, in setting up factories in Myanmar, right, the authorities here are actually quite strict about requiring an ESIA report. So that is actually something that is good for the country, but it actually creates additional hurdles, because you need to finish the ESIA report before you can actually get the requisite approvals to set up operations there. Yeah. So again, from the ESIA side, then you need to consider whether, if your operations are polluting in nature, are you able to do mitigating factors like setting up the water treatment, the sewage treatment, and things like that. Yeah. Then the last thing is basically consider the area that you are setting up operations, whether you are able to find the workforce that you want. Yeah. So if you are doing low-skilled jobs, which simply require a lot of low-cost labor, right? Then if there is abundance of labor around the area, then I think it's good. But if you are unable to find labor there, then that is a problem. Yeah. I think that's roughly what I think could be some of the stumbling blocks to diversify the supply chain in Myanmar.
I think there's some technical issue and Sook Ping has dropped off. So I think perhaps because we have already overrun, perhaps we can end the session now. So sorry for this abrupt end. Okay, we have now come to the end of the webinar. Thank you for your participation and for staying until the end. A big thank you to Sook Ping, Samuel, Chester, and Kim for their time and valuable sharing today. We hope that we have benefited a lot from the webinar. Also, please let us know your comments on the webinar through the feedback survey. You can scan the QR code on screen or follow the redirect link after you close the session. We have another exciting session lined up for you tomorrow at 2:30 p.m. Please join us for the Philippines Market edition of Thriving in the Next Future of ASEAN. In the meantime, Stay safe and healthy. See you tomorrow. Thank you, Gimbi.
Thanks a lot.
Thank you.
See you.